a sense of capital. Aloha, ladies and gents. Welcome back to a new episode of A Sense of Capital Life Earnings. Your host of today, as always, is Julian. I'm very glad to have you in. Even though I'm again 2 minutes late, but honestly, guys, 2 minutes for me is not that much, so I'm actually quite surprised I'm on time. However, oh, wait. I think I need to sign in into the chat. This is what I quickly will do. Give me a moment. So then I can make sure to not miss any communication with you guys. And already can see one have joined, so I'm not sure who you are, but very glad to have you in. If you like, if you want, feel free to use the chat function. I will be there soon. I guess. Hopefully, at least. Wait. First time almost on time and then prepared so badly. That's not that nice. And another viewers in there. Again, thank you very much for joining. Appreciate this highly. Okay, so let me quickly. Welcome. So yeah. Okay. Oh man, and now two-step verification process. So I just quickly need to enter and accept the login try, the signed in try. Okay, now it should work. Check 1, 2. Aloha. Okay, looks great. Okay, guys, one zip, and then we already start with the session, start with the live stream. One more time, very glad to have you in. Today we will talk about StoneCo, the point of sales, payment service provider, financial service provider, and of course ERP software solution provider out of Brazil, which as well is active in I think 16 more Latin American countries. But before we cover the Q3 2024 earnings results, which will be live in roughly 10 minutes. Now it's 5 minutes or 9:55 CET or 3:55 ET, Eastern Time. And a quick disclaimer is always addressed to you guys. So take care of yourself, take care of your own financials. In the upcoming minutes, that will not be financial advice, consultation, or whatsoever. And there is no guarantee for the correctness of the provided data. Okay, guys, so we jump right in. And as always, a very brief introduction about the company we talk today. Oh, that is my live stream. That's a good sign that it's working. But I want to show you part of the website. You can see it here, the StoneCo logo in the top left. What they are doing. So their legacy business and core business is for sure their point of sales solutions. As you can see here, this kind of terminals. There are more simpler ones, more complex ones for micro, for small, for medium-sized businesses, especially as well for key accounts for larger ones. But the core is definitely on the micro, on the small-sized businesses, small restaurants, for instance, or fashion stores in Brazil. But that is not everything. So they have a bunch of software solutions they work with, as you can see here, which can get utilized by as well retail owners, retail shop owners, to have better stats, better analysis, better insights of their business and to work with those data. And I think roughly 3 years ago, it was actually the largest digital M&A process in Latin America. StoneCo decided to acquire Links, which is as well a software company, ERP systems, enterprise resource planning platforms for different kind of stores. You can see it here, car manufacturers, restaurant chains and franchises, taxes, delivery, pharmacy, retail pharmacy, public pharmacies, supermarkets, hypermarkets, all kind of stuff. and actually them, you can see it here, more than 60,000 companies are using them in 70 different countries. Roughly, let's say 50% market share. And what makes it special, I mean, with their core businesses, their POS solutions, point of sale solutions, as I mentioned already in the beginning, they're covering and setting a higher focus on the micro and small business. And with those solutions, as you can see, the big global brands, they're setting a higher focus on the large caps, on the key accounts, let's say it like this. It's stated as well in the documentation, in the earnings results documentation, as key accounts. Just a quick view on the price chart. As you can see here, year to date, on a year-on-year, so in the past 12 months, it's down by roughly 4.2%, and actually it had quite nice development when we just compare, for instance, till the point in time of December, or let's say end of 2023, end of last year. So year to date, it's dropping as heavily, like somebody switched off a switch basically, or activated a switch, and somehow stock began to tank. Maybe it was Warren Buffett with Berkshire Hathaway, because he was invested in it and decided to leave the position completely and sell it. And actually, yeah, it was in this period of time, as you can see here. When we talk about StoneCo, about what kind of revenue, yearly revenue, annual revenue we're talking about, you can see here, talking about roughly 2.3 billion US dollars in 2024. So actually not really strong revenue development compared to 2023. But even though I think those bars are not 100% accurate, there will be, I estimate at least, a small development, a small growth. But I assume something like a single-digit number growth. Yeah, definitely a profitable business for sure. And when we talk about the capital structure, as you can see, yeah, market cap is roughly 3.5 billion US dollars, so a micro cap or small cap, I think. Small cap is more accurate. But based on the low debt level and high cash balance, overall we're talking about an enterprise value of 4.3 billion US dollars. So definitely not the smallest company, especially for considering that it's headquartered in Brazil, in Latin America. But yes, of course, you can't compare it to other companies who are active in the payment sector, like Adyen, like PayPal, like Toast, like Block. All of them I think all of them are larger compared to StoneCo actually. Taking a look on their earnings history, focusing first on profitability, bottom line growth, so earnings per share, and you can see it very greenish, but not that confidently, not that constantly, especially in the past 4 quarters, 4 earnings. One time they just covered the expectations, the forecasts, and actually one time they missed the expectations, even though it was a small miss. Taking a look at the revenue side, it looks way more worse. Yeah, so even if we zoom a little bit out and go further in history of StoneCo, a lot of times they just reached expectations, and in the past 3 quarters actually they missed each quarter. Why is that the case? Who knows? Maybe part of it is competition, but what is for sure in this aspect is as well the interest rate. You can see here it's actually increasing, so it's going into the opposite way compared to the US dollars and the Fed decision. So the central bank with the Selic rate, so the lead interest rate in Brazil, decided to go in a different way, put it up 2 times. You can see it here just lastly in 6th of November, so roughly 1 week ago, they increased it 1 more time. to more than 11%, so which is quite a lot, because there was first signs that inflation rates re-increases. However, there are other rumors in the market and other analysts who say, okay, maybe that was already an overreaction, and right afterwards they will start to decrease or at least keep constant the inflation rate, especially when you consider what is going on in the US, for instance. And let's check out, that's another reason why overall the stock is tanking, because you need to keep in mind that it's in the Nasdaq, so in a US listed stock, but it's doing business with Brazilian real, with the local currency. And when you take a look on the local currency, in the past 12 months, it's down by roughly 15%. So it was, for a certain period of time, as you can see, quite stable. Yes, I mean, forget the first half year in this chart. But lastly, in the past year, dropped heavily, and of course, this has definitely a negative impact for us as shareholders, as investors, and hopefully the Brazilian real will come back in old strength and being a little bit more competitive in comparison to the US dollar. Guys, let us first time quick today check together quickly if there are already some numbers out. No, it's not. Take focus on this column, 3Q, third quarter. We will check it out here. First we will focus the earnings release, and then together we take some time as well to screen the earnings presentation slide deck. Very interested in it. You need to know, guys, that I'm personally, let me share it, I'm personally semi-convinced by the stock. I mean, never forget that I only invest in 6 growth stocks, no matter if it's growth on profit level or most of the time actual revenue level. In this terms, profit level. So it's quite a cash cow, let's say it like this. And I still believe in the fact that it's a cash cow and there's high profitable and high potential in the future left. And let's see what kind of potential is resulting out of consolidation activities in the future. We will see. However, from all of my 6 invested stocks, StoneCo is the least favorite one. So I mean, it's a positive sign from my perspective, at least, that I'm invested. But I already had a few times doubts if that's good to be invested. And actually, after the last earnings call, I rated it, the earnings results, at least negative. And then I did an earnings roundup session episode. You can see it on my YouTube channel as well. And I changed the rating from negative to neutral, as you can see here, based on different facts. If we have more time, we can cover it, but I guess we're running a little bit of time. However, based on this conviction, this level of conviction by myself, my position is at least as well not the largest one. We're talking about roughly 9, maybe today 10,000 US dollar, 10, 11 thousand US dollars, not that much. So one of the smaller 2 positions, and way more smaller than, for instance, Hims and Hers. However, I see potential here, and I'm ready to be surprised. And what means surprise for me? Look, guys, as always, I prepared a table. Together we will screen for the different KPIs, enter it into this table. At the beginning it looks always complicated, but I will cover it with different ratings, my opinion about it, at least how I see it. And then I think we will achieve a more clear picture. But focusing today, my target is, forecast is 1.77 Brazilian real. Everything is stated in Brazilian real, guys. Keep this in mind, please. So exchange rate is 1 to 5 US dollars, something like this, 1 to 6 US dollars. My target is a slight beat of 1.8 earnings Brazilian real per share, which is definitely a record by far. Very strong target already with 1.77. So let's see if they can make it happen. I don't think even Q3 is the strongest quarter. Very much it's Q4. So it would be definitely a good sign that they can reach it. And in terms of revenue, and I've seen it in the past 3 quarters, they missed it. So for me, it actually a minor beat would be absolutely nice. How I calculated this, basically I want to see that on an absolute scale, Q2 2023 to Q3 2023, the same absolute amount on top in terms of revenue, so 190 million Brazilian real. I want to see this as well, this raise. So that's my target. So one more time, overall 1.8 Brazilian real per share, and let's say roughly 4.4 billion revenue. Okay, and I would not be surprised if the results are now already live. Yes, and they are, indeed. Okay, guys, let's get ready for it. I hope you are ready, because I am. I hope at least I am. Then start with the press release, I would say. And again, one more time, don't forget talking about Brazilian real. One more time, where we are. Okay, there's adjusted net income. We take care later on, but first glance looks quite positive. I mean, guys, I need to be always careful, but first glance, again, 177 was earnings per share target, and I guess they really provided a strong beat. And keep in mind, the stock was tanking heavy in the past months, and I can imagine this already, even though the details behind the curtain are not looking that well, and I assume they look well, yeah, but this already is definitely a surprise. Market didn't expect too much, and that's already a strong one. Time to celebrate, I think. But what is going on with the revenue? I'm a little bit limited currently. Here we got it. And revenue, on the other hand, not convincing. They provide a small miss. Yeah, small miss. But it is a miss, and you can see it year on year, 6.9%. Yeah, not that convincing. However, guys, I would say, before we step deeper or go deeper into the details, as always, I try to now enter all the informations with you together into the Excel sheet, and then we can live compare it to last quarter, to year-on-year growth developments, and rate it and get a better feeling of it. However, starting with the adjusted basic EPS, and guys, I mean, this episode is called, I think, is it still a cash cow or something like this? It's called this episode. And just focus on the 1.97 Brazilian real per share. That looks for me at least like a true cash cow. So let's go back and enter this here into the field. You can see it here, roughly 50% year-on-year growth. And here I have no other choice to immediately grant it a positive rating. But now taking a focus on the revenue, and I would love today that they achieved a double beat, because I really think the stock needs it. But again, they missed it. Even if it was a slight miss, don't like it to see the fourth time in a row, fourth consecutive quarter with a miss. However, let's enter this as well. How much is it? 33572. 33572. 33572. There we go. And you can see the small miss. However, I'm very strict in this regard. If you are a loyal viewer since the beginning, or even in more recent episodes, you know that I'm very strict with my rating. I don't want to basically not be honest to myself, yeah, and trick myself. So if they would just cover the forecast, for me it would be neutral. A small bit would be already enough for positive in terms of StoneCo, but a miss is a miss for me, and a miss means negative rating in terms of revenue. So far, overall, we grinding on a neutral base. Cash position is strong. I would not be surprised if they, it's getting stronger, I guess, but we later check out the net com and other financial numbers. But I would not be surprised if they rolled out another shares buyback program. I already can state right now. Okay, but now we dig deeper into the details and starting with their core, or let's say the fundament of everything, the point of sale solution business. And we start with the micro, small, medium business, MSMB, micro, small, medium business. CTPV means card total payment value, I think. Value. So let's check out what they achieved and for their smaller businesses this quarter. Okay, let's go back. Heading back to the slides. CTPV. Here's already guidance. We check out it later. I don't want to. Here we have the numbers. You can see it. Is it like value or volume? I already sometimes. I want to check it out right now. Fuck. Oh no. Okay, I assume it's volume. Some companies tell it stated value and sometimes volume. However, let's just go on with the plan and covering the CTBV. So you can see it, they differentiate between card TPV and PIX. And card is basically credit card, for instance, and PIX is QR code, and PIX is actually a national payment method, yeah. So which is a little bit cheaper for the citizens. They don't need to pay any fee for MasterCard, Visa card, this kind of payment processors, and again run by the PIX, by the government. So of course it's beneficial as well for StoneCo, but we would always love to see that the legacy card TPV is increasing and developing better than the PIX, the governmental payment method. However, we're talking about 107 billion, and so let's go back and oh wait, I forgot to switch on the music. Now it's on, I think. Yeah, I already missed some kind of special vibe, but now it should be good. 107 was the number, right? Okay, let's go back. 70. Oh, I guess I was a bit over motivated. Or I wasn't. Okay, now it looks good. And we need to check out quickly because this kind of information was missing. They now separate a little bit different and report a little bit different their financial numbers than in the past. So Q3 was missing, and now we can check out what was 1 year ago, the CTPV, and we got it right here, and it was 89.6. So heading back, 89.6. All right. And maybe let's go directly on with the, maybe we'll cover really shortly the overall TPV, so the MSMB TPV, but as well for the large customers, key accounts, and then we can make a judgment about it, even though for me just MSMB CTPV and the CTPV share, so much how much CTPV in term compared to PIX, QR code, payment volume or value was generated. However, let's go back and focusing here as well. It's 16.7 and 7.9. Okay, 16.7, 16. And 7.9. Okay, so Then we take a focus on key accounts. You need to know, guys, that key accounts getting more and more less relevant, even though StoneCo wants to, in the future, set a bit higher focus again on the key accounts on a large customer base. Wasn't that relevant in the past, and most of the time more relevant in terms of their links, in terms of their ERP software business, what they have acquired 3 years ago. However, in past quarter there was actually quite a surprise, because it growth quite strongly, and let's see if that is the case still. So why is the Hi Zajic 72, nice to see you again. I always have this kind of background music. I hope it's not too loud, kollega, but I think I didn't change anything. I actually don't hear it, but I hope you can hear it. So it always, I think it always brings us in a good mood, and Afro ties a little bit our mental capacities. Okay, guys, but however, let's go back and check out key account CTPV, talking about 11.6 and 14.4. You can already see it's smaller than in the past. And 11.6. 114.4. Is this correct? Okay. And the overall, we need to. Okay, perfect. Nice to hear. Nice to hear. Needs a little bit of time. I mean, I love StoneCo that they provide that much information from all the investments, and that gives me actually a good feeling. All the companies I'm invested in, from my perspective, the level of information transparency is on the highest scale in terms of StoneCo. I'm not missing anything. Sometimes it's even too much information, and yeah, we will see if that's today again the case. But you already can see how they separate it and all this kind of stuff. They're really not, at least from my perspective, they're not hiding anything in front of the investors. So we talk about key accounts over TPV 14.9 and 16.7. 14.9. And too much zeros. Maybe I need to 16. Need to change this in the future. Okay. Okay, sometimes it's getting quicker than expected, and we already now covered this core number for this core business, which is really total payment value. And first of all, starting with the top line TPV. So no matter if we talk about MSMB or key accounts, and this, guys, let's check out the development. And maybe for you it looks quite compelling when we compare it to Q2, but more important for me, as always, is to check out what was the year-on-year growth. So cutting out a bit the seasonality, and when we see Q3 year-on-year growth, so compared to Q3 2023, it was 11.9%, so let's say 12%. And last quarter we're talking about the growth of roughly 22%. So maybe that was a quite strong quarter, yeah, I don't want to lie, yeah. However, compare it to past quarter year-on-year growth, 11.9, still more than I think what is the revenue target. And it's always important that the TPV is growing very well, and then based on how the management, how greedy they want to be, how aggressive they can set up the fees, so the share of each bill which running through the point of sales solutions at the retail stores, they can adjust it and getting a little bit more aggressive or less aggressive. So for me, TPV is always more important than revenue. And honestly, 11.9%. Look, guys, I want to initially give it a red rating, but I think last quarter was just a very good one, and 12% year-on-year growth is definitely not that bad. I hope I don't need to correct it tomorrow, but let's say for right now I'm fine to give it a neutral rating, but with the tendency in the negative area. However, we have two more KPIs we need to cover here, and now focusing CTPV. So really the card business, not the core one. And I mean, for this QR code scanning, it's not pretty much required to have a point of sale solution or something like this. I think StoneCo is not that relevant like it would be or like it is when you want to pay with credit cards, for instance. Yeah. So that is definitely more crucial, and that's, if you already on the first glance can see it, it's by far the largest one. So we can see here quite similar development, because even though the gap is not that strong comparing it to past quarter year-on-year growth and this quarter year-on-year growth, it looks a bit better, and as well the difference is only roughly 5%, not like here 10%. So that's actually a good sign, and you can see already on the first glance in the next row there's the PIX QR code TPV, and that growth decreased way heavier compared to last quarter year-on-year growth. So it's reasonable. There's always saturation going on a certain level, but yes. So from my side, I can rate this as well neutral. Don't want to be too harsh here, honestly. Again, for me, it's a profit growth company. Let's see, again, consolidation, what maybe they acquire another company in the future. Maybe even they get acquired by a company like Mercado Libre or something like this. Yeah, like Mercado Libre is as well a bit like a blend out of Amazon, so e-commerce and as well banking business. Maybe they are interested as well in the future to acquire StoneCo. Maybe it will become a target in the future. But till this point in time, I just want to see that StoneCo is generating huge amounts of cash, buying back shares, and sooner or later, either the stock price is dropping till a certain point of time, till the market realizes, look guys, each year, like with PayPal, they're buying back this amount of share, the valuation, the price sales, and the price earnings ratio is that low. There's no other way that investors need to set the focus on it, and I think it's just a matter of time. And that's actually the reason why I stay invested, and in general I like the business a lot. However, the next KPI we want to rate, and we don't want to take care of all this, high long-term investing. Very nice to have you in. Going back and checking now the ratio between PIX and CTPV, and as I mentioned, I want to see that CTPV stays constant, stays strong. Still, I mean, management stating PIX business is not that negative for StoneCo. I'm not so familiar with it, but I have the feeling it's not the case actually, because imagine that everyone would use PIX basically as a payment method, just using QR codes. Still, yes, point of sales terminal is connected to the ERP software. You can add different data. You have way more insights as a retail shop owner, but you not 100% require the solutions of StoneCo. So, and here we can see it, and we just need to compare those numbers. I mean, past quarter we talked about roughly 90%. Now only 86% of the total payment value is covered by CTPV, by cards basically. And so that is what I don't like to see, and I rate it negative. Even though those both numbers are way more essential for me, but yeah, I need to stay strict here as well. But guys, let's go on and just check this here. Even though it's not that that interesting, not that heavily interesting, but what I want to show you, what I've already mentioned, is the TPV in terms of large customers. You're welcome, long-term investing. It's definitely a favor by myself that I'm able to do this, guys, and yeah, highly appreciate your feedback. and the support, of course, that keeps me very motivated and keeps me going. Can't deny this. But however, guys, look, when we take a look at the key account TPV year-on-year growth, yeah, it's decreasing even stronger than in the past. Yeah, so I think last quarter it wasn't that bad with -7%, even if it sounds awkward. But if I remember it, that was at least my memory. But now it starts to re-accelerate it, and yeah, I really think large companies are somehow, I'm not sure what is the reason, if maybe the take rate is lower in terms of key accounts. We will check this out in a moment. So key accounts, because larger companies, they are just more powerful in terms in negotiations, what kind of take rate they StoneCo can ask for, so what part of the bills they can take out as fees for their revenue. Yeah, but we will see it in a moment. More important is the client base. I mean, the management already stated, I think 2 quarters ago in earnings call, that it's just a matter of time that they reach the peak. And I mean, in Brazil, we're talking about, well, how much was it? 200, 300 million population. And we're talking now, as you can see here, or at least past quarter, about almost 4 million retail shops, which is already massive, massive. High lawn mover, man. One of the most loyal one, and so grateful that you are as well in here. However, let's check out what is going on with the client base. So this is for me as well a very, very, very crucial number. Heading back to the earnings press release. And here we have the client base. And talking micro, about 3.968 million. 3.9, oh god, complicated number. 39683. 39683. 39683. So much pressure on my shoulders. Is it too much? It's for sure too much. Okay, that looks good. Oh, it's still too much. Man, what's going on? Still too much. Is it true? Yeah, for sure. Okay, now it looks good, I think. And we immediately enter as well the key account active customer base, and here you can see talking about 51.7 million, I think, thousand guys, 1,000 million would a bit too much. 51.7 thousand. Okay, so and now give this as well a rating and checking out what is going on. I mean, client base, you need to know that originally, again, that is the legacy business, the original business, the OG business, and the fundament of everything. But now they're heading more and more towards to become a digital bank, providing loans, credits, deposits, this kind of stuff, yeah. And it's important that the client base is raising, because if the client base is vital and strong, they can utilize it for any other cause, yeah, basically. And so we want to see it's growing, and let's check out what is going on here. At least it's growing, that's good, it's not declining. And you can see past quarter was very strong with 30.3%, quite surprising, honestly. In the big number, now it's 21%. Okay, looks way slower and looks like they're getting closer and closer to the peak. That's very unfortunate, but still 21% is strong. And again, key accounts, you can see it, it's decreasing, not that heavy like past quarter, but it's decreasing. However, this one, even though it's lower than past quarter, and I think that was a surprising positive one, 21% is still very good. Even though we need to keep in mind that's a critical number, and it's getting tighter and tighter, more narrow and narrow, and the competition gets more stronger. I mean, there's a player like PagSeguro which providing more or less very similar solutions, point of sales terminals, full banking license, for instance, way more history in the market, very serious competitor of StoneCo, and as well a publicly traded company. So if you are interested, make sure to do some research about this company. I decided for StoneCo because I like this ERP software business background, which actually is not that relevant anymore because very likely links getting sold in the future or will get sold. I don't know. However, I rated it green. I am satisfied with it. Not that heavily green, but okay, it looks okay. And now, I mean, what we have covered is the overall money which running through the systems. We covered the ratio between money running first through the card into the system or through the PIX QR code into the system. And we covered the number of retail stores, retail shops, which is roughly 4 million. 4 million unfortunately not crossed yet, but very likely next quarter. And now we check out about all this amount of money, Brazilian reals, what is the take rate? Let's see. And we're already on a very high level because you can see here full year guidance. And full year guidance is 2.49%, and they already ran on a level of 2.54% since 2 quarters. So definitely are in line with the targets. Non-mover RAM, yeah, appreciate as well that I have the chance to cover it and that you joined too. Yeah, so definitely a pleasure. Let's take a look at the take rate, and very likely it's take rate. Okay, here we have the take rates. It increased by 0.04%, 2.58 and 1.47. So let's go back. 2.58, 1.47. Check one more time if that's the correct number, not that I'm missing anything. And looks good so far. And honestly, guys, that is very positive on both dimensions, yeah, because I mean, you can see it already on a glance, and I showed you the full year guidance. It's in front of the target, of the annual target. Again, even a grow, it's a tiny growth, but it is a stronger one than past quarter. And if it would be just stable, I would be fine. But it's actually growing and accelerating. And even in the key account business, they accelerated it. I mean, the key accounts getting fewer and fewer. You can see it here, 100 key accounts less, but they're squeezing the lemon a little bit more strongly and intensively. And I like to see this because, look, if they even think we can't anyhow doing that much money with the key accounts, then why not utilizing it and take it very serious and being strong in terms of negotiations? And I think they're doing it. So both of this I rated positive. Yeah, and so covering first the point of sales legacy business, it's greenish. It's actually greenish and positive, and that's nice to see. That's very nice to see. I have my doubts as well about this investment, as I mentioned. I like to invest more into growth, revenue growth companies and not profit growth companies. So I always have my kind of doubts when we talk about StoneCo. However, nice to see. But now we come to the growth side, to the revenue growth side actually, because as I mentioned, this transformation into a bank is going on, but with the special aspect that this bank has ERP software solutions which are running in the retail shops. So strong insights about retail market developments, strong insights about the screening of the customers, should they lend money or not, for instance, way stronger ones than regular bank institutions, and of course the point of sales terminals, yeah, with all the customer data and all of this is existing. So I assume this is worth something, and definitely something, yeah. However, let's check out first, talking about banking, what is going on with the active banking client base of StoneCo. Heading back, checking out where banking is. Yeah, we have it already here. 2.842 million. 28421. 28421. 28421. Okay. Oh wait, I'll show you that I've just entered it. That looks actually on the first glance quite okay, but not that sure. We will see. And now we check out what is the ARPAC, the average revenue per active customer or active client. You can see it tanked a bit. I mean, Q1 it was 29 Brazilian real. 1 quarter later, roughly 26 Brazilian real, so more than 10% lower. Hopefully, and it was, as you can see here in the past, at 37 Brazilian real. Doesn't need to mean anything. I mean, can be a strategical move whatsoever, but we would love to see it's increasing and not getting lower. So that's definitely as well a big number. We first covered the full block, entering the numbers, and then we evaluate them, value them basically, or judge about them. So banking, ARPAC, let's see if they stated something about it. Here it is, 28.6, looks strong, no doubt about it. That is very nice to see. That is very nice to see. Because on a certain level, you know, it's crunch time. Yeah. For those of you who joined or who have been very early viewers of my YouTube channel, live earnings in the past have been titled crunch time episodes. And yeah, same like with earnings results. I mean, you can play around, you can cast more and more customers and increase your customer base. But on a certain level, you need to monetize it and squeeze it out. Yeah, and I like to see that they are doing it. And yeah, that's nice. But check out what is going on with the base of everything, the client deposits. It's as well a level of trust and how they adopt the client base, how they adopt to their services. Getting back. Retail deposits. Okay, I think that's the number if I'm not mistaken. Looks good, I think. Yeah, 68168. 68168. 68168. Okay, is it working? It looks good. Okay, guys. And so now we can cover the first block, the banking block, basically, starting with the active client base. And we can see, I mean, we're talking about a remarkable year-on-year growth of roughly 62%. Past quarter, now 47%. Still seems quite high, but honestly, guys, I would love that it's accelerating even more and more. And I mean, they have this 4 million point of sales customers in their system. And when they already talking about 2.8 million, that means a bunch of the legacy original point of sales terminal customers are already transformed to banking business customers, which is great basically. However, I would still love it's a bit larger. For instance, look at this year. We're talking about more than 300,000 more, and now this quarter just 140,000 more. Might be seasonality as well. Yes, might be actually the seasonality. It looks a bit like it 1 year ago. I mean, Q1 to Q2, roughly 400,000 more, and Q2 to Q3, just less than 300,000. So I assume it's actually not that negative, and we should be satisfied that they are able to transform those customers, those existing customer base to their banking client base. Let's rate it green. Come on. I have a good day. I'm not sure if that's so good, but we can keep it very short. When we talk about the ARPAC, it's reaccelerating. You can see Last quarter year-on-year growth was roughly 2%, now 12%, re-accelerating. They're getting more aggressive in this regard. Love to see this. That for sure is a reason why the EPS is working out so well, with almost 2 Brazilian real per share. So definitely a cause. And client deposits, just to check it out as well, developing great. 400 million more Brazilian real. That looks quite constant. If you check the steps, that's fine. And you can see it as well. It's just 12% less year-on-year growth than past quarter. I think that's perfect. That shows that, I mean, the client base is growing less strong on both quarters year-on-year growth than the actual deposits, and that shows basically that each client is depositing more money on average and not taking money out or something like this. Great to see. That's a good sign. It's important that the customer base is trusting. From my perspective, I'm not a banking expert, but at least if I would be in the management, I would love to see that my banking customers and banking clients are trusting it. But let's look now on their newest business, the credit business. And that might be a rising star, and the reason that there's, even in terms of revenue and then profit, there's definitely some room for improvement. Let's check out what is going on, guys. Here I have strongly high hopes, but what I want to fixate right now is that it looks not that bad. It's yesterday evening I covered I backed Grab results, and I already had good feeling. Sometimes you're lucky or sometimes not. Yesterday I was lucky, and the results have been very, very good, basically very positive. And but it took so much time for the market to recognize Grab as a company, and it's still not recognized. The same with Hims & Hers. Hims & Hers actually is the best example for this. I mean, yes, there are short reports, there are short sellers. There's always some uncertainty as well in terms of these weight loss products, if you're familiar a bit with Hims & Hers. But overall, the management and the company itself executed very, very well, always better than expected. And however, market didn't reacted like this, appreciated the performance. And I think it's the same with StoneCo. StoneCo tanked a bit because of Berkshire Hathaway sold their stack. Then big banks downgraded the stock. The analysts downgraded it, not all of them, but a bunch of them. Then this Brazilian real issue is going on. It's the currency getting weaker. Interest rate is not favorable in terms of development. It's going up. So yeah, there are reasons for it. And of course, competition might go more intense as well. But look, the internal data, the internal parametrics, from my perspective, looking positive, and it's going well. But we are not done yet. Software is always the biggest challenge, and again, I have high hopes with the credits. So let's see now what is credits. I mean, that's for me today at least very likely most interesting sector we're talking about. So starting with the credit clients, going back. Credit should be here as well somewhere. Yeah, okay, we got it. Active contracts it is, I guess. Yes, it is. And we're talking about 28,960 active contracts. 28960, 28960, 28960. Okay, credit card portfolio, checking out this as well. We need to be careful here. I don't want to use the wrong number, so I need to make sure that I'm using the right one. I assume it's actually this one. Check this out. Wow. I think it's this one. Portfolio. I mean, it sounds portfolio, so wow, that looks good. I think that looks good. 95.1, 59.1, 59.1. Okay. That makes me smile a bit. Maybe I'm missing something, but that looks good on the first glance. I don't have too much doubt about it. And we need to enter here as well the Q3 2023 numbers because they have not existed, or maybe they are not existing in general. Let's see. Not available in this case. So we keep it as it is and remove the coloring. Okay, looks good. Let's go on with working capital portfolio. I mean, then it's difficult to do. Why is it not existing? But Q2 is existing the numbers. What's going on? Am I missing something? Wait one moment. No, I don't think I'm missing something. Okay, don't know why, but somehow I have the numbers for Q2 but not for Q3. Awkward. Okay, however, let's go on and checking out the working capital. In terms of the credit business, working capital is 8593. 8593. So many numbers. 8593. Oh, that's 4. Okay, got this and the past 2 numbers, and you can see it's already halftime or even more than halftime. We covered already a lot of numbers, and each behind of those numbers, I'm not the true number guy, but at the end there are stories behind it. If you love investing, if you love stories and the colorful aspects of the business world, and somehow you can't work around numbers. Here, let's see if we have Q3 numbers. That would be amazing. Yes, and we have some, and it's, as you can see here, 113.5. 130. Okay, that looks good. Now we come to the default rate, which means basically the percentage, the share, the company is very likely missing when they grant credits, for instance. Yeah, so you see it's quite new, this business. The numbers are low, and they are actually low. I mean, at Nu they are way higher. I think something like 5, 6, 7%. Nu Bank, Brazilian bank, digital bank, actually. Oh wait, you can't see it that much, so now it looks better. Yes, but let's check out what are the numbers in terms of the default rate. Talking about, oh, it actually this increased and that decreased. If I would be a banking expert, I would very likely know how to work now with this, but however, I just copy it, and I think that's enough in this scenario. 1.93 and 3.7. 1.93, 3.7. Okay, and let's check out what was the legacy, the original ones. 1 year ago, 0.45 and 0.2. 0.45. Yeah, and you can see, I mean, how it developed. I mean, I think it's, I assume it's still quite low, and the business again is very new to them, this income source. Yeah, however, I don't want to judge about it, and let's start with the credit clients. That's way more important. And I mean, look guys, originally we talked about more than 3,500%, and now it's 670%. Yeah, why? Again, because it was that youngest business. You can see Q1 was not existing 1 year ago, and then it started, and then obviously you cast and recruit more and more clients. And I think 600, yeah, it's hard to judge about it. I mean, what we can take a look for is, I mean, 8,000, or let's say 7,000 more, then 8,000 more, then it starts to decreasing, so it peaked a bit, so 8,000, maybe it's seasonality as well, but however, so 7,000 more, 8,000 more, then 6,000 more, even less than 6,000, now only 4,000 more. Guys, let's make it simple. I have not too much clue about it, but what I can tell is that this number is not that impressive, so I state it as neutral. I don't assume it's negative, something like this. It's strong that it's still growing on a quite constant base, but I assume not that compelling anymore. Not that compelling anymore. Maybe even red would be the right color, but yeah, not sure about it. But now we take a focus on the credit card portfolio, and here strong growth without a doubt. Past quarter it was year-on-year growth of 62%. Unfortunately, you can see it there. The Q3 number is missing. Yeah, I'm not sure why. Maybe this number is not correct, but I assume I have it out from somewhere, let's say like this, and there is a fundament of this number. Yeah, maybe I remove it. That is maybe the better approach. I assume it's working capital, very likely. So no year-on-year growth, quarter-on-quarter comparison, but what we can see is it's still accelerating heavily. I mean, 5 more, then 22 more, and now it doubled, so 100% growth more or less, so 30 more. That is for sure, from my perspective, a positive development, a good one. Love to see it. Now checking and look at the working capital, and here again we have crazy growth numbers due to the young business, the new business. However, we do it with the same method like we did before, with a very schoolboy approach. So what we have here is 200,000 more, roughly 150,000 more. So it decreased slightly, and yes, there might be seasonality, so keep this in mind. However, and then it re-accelerated with now almost 200,000. Looks for me promising, looks positive. Could be bigger in the end, but however, I like to give it a green one. Give it a green one. Definitely doesn't look negative. And now the default rates, I mean, you can see it decreased, which is great. That is nice to see. Obviously, it's not that small like 1 year ago, but it is smaller. And so I give this green one, because compared to last quarter and this quarter, it increased. And then started to decrease, and 3.7%. Honestly, I still think it's quite low, but it looks like a strong growth, and it's a bit hard for me to figuring out what is the background of it. I can imagine that analysts at the earnings call later on will for sure reach out to the management and ask the question and address it to the management board, so make sure you join the call. But however, for me it looks too strong, this growth, and I rate it negative, even though it's for me not the most important number, and I can imagine that there is something behind. So overall, we're talking about a neutral picture, but actually a more positive one, more green than neutral. So I rate it green, even though it has a neutral tendency, and that is nice to see, because So far, everything looks positive. And now we take care about, a little bit the trouble-led business, the software business. They have their own solutions, but the primary chunk of it is this Links acquisition, the one which I shared with you a moment ago here, this company, even though it looks quite compelling, active in so many Latin American markets, and I always had the idea of that they use those offices to establish their point of sale solutions even in further markets in Latin America. So far didn't take place. What takes place is that those business in Brazil, especially when we talk about petrol station and retail stores, they are an opener to software solutions for their point of sale solutions. That is nice to see. So it's an additional driver and grants them additional leads and potential customer contact details. So that is nice to see, but somehow it's not working out that well. And that's the reason why StoneCo currently working with, I'm not sure who it is, JP Morgan or something like this, to assess and figuring out if it's reasonable to sell Links business. Yeah, and there are definitely some players in the market who might be interested, because just the network, the pure leads, amount of leads and contact you have by acquiring Links is strong, very strong, definitely adding value. And however, let's check out what is going on with the software business. And it's not developing that great all the time, but maybe we see a turnaround. And let's check out what is going on with the software revenue. So top line growth, going back, software, 24 times software, we will find it for sure. Oh, overlap, we'll check, we get it later. But software we need as well. Here, we have the revenue, I think. And revenue is 393.4. And 3, 4. Oh. And I mean, that looks good on the first glance, because at least it's somehow growing. That's okay, but we check it out later. But damn, okay, the overlap, we already had it a moment ago. What is the overlap? Basically, that's an indicator for, let's see if there is more overlap or there's only one. You can see it here, look here. MSMB, they explain everything. I love this so much. Refers to the MSMB CTPV in software installed base within the priority verticals, gas station, retail, drugstores, food, and horizontal software. So basically, they use the software solutions to acquire more point of sales and financial service solutions. So for banking, credit, and POS. And so that is basically an indicator for cross-selling. Yeah. Upselling means if you sell someone who originally only wanted to purchase one apple, 2 apples, and cross-selling means you're selling next to an apple as well a lemon, for instance. Yeah, and that is the case with this overlap. So let's see what is going on there, and if they can somehow monetize and utilize the ERP business, even though the software business itself is not developing that great, they can utilize it to achieve more cross-selling. Oh wait, I'm not sharing the browser. Here it is. Here it is, and here again you can find the definition of it. Sorry that I missed to share. However, we're talking about 5.8 billion Brazilian real. So going back, always large numbers. Okay, software adjusted EBITDA. Let's see if they can make some money out of it. Okay, here we are. share the screen. Yes, looks good. Software, financial service, software. Okay, we got it here. 71.8. Oh, doesn't look that bad actually on the first glance. 71.8. I can imagine that the stock is up actually. Would not be surprised, but there can only be small numbers which have result in even the stock is dropping further. There's always a chance when we talk about StoneCo, and again, keep in mind, there is definitely some headwind going on the macroeconomical stage. And that, of course, has always, is a bitter taste in the back, yeah, of the investor's mouth. Okay, let's analyze these numbers as well and judge about them, starting with software revenue. Look, I mean, it's not that much what we need to achieve. Yeah, it's not that much. Last quarter year-on-year growth was almost 0%. Now it's 1.4%. Not sure if we can talk about, or if we can state it as re-accelerating. It's going that great. But what I like to see, at least in the past 1.5 years, that is the best result. That's the best result. And yeah, inflation is going on and this kind of stuff. We need to consider it as well. So considering inflation, it's not that great anymore. And 1.4% year-on-year growth is as well not that compelling. But guys, that's okay. I'm not expecting any more from Lynx and from the software business, even though it was a big reason why I originally invested into this company. But in the past, this digital banking business was pretty much not existing. So the investment thesis has changed a bit, and I like that the StoneCo management adopted to the situation and realized, okay, it's not working. And yes, I think the market interpreting the potential sale of the release of the software business, of the Lynx software business, as a negative, but I see it's even more cash, what they can utilize to even buy back shares at the end. Even if that's the case, it's okay, it's fine for me as an investor. And I guess they already utilized the contacts, this network which resulted out of Lynx. So it's not like, yes, they paid a huge amount of money, I think more than $1 billion US. And now it's not worth that much anymore. I think it's only something like 500 million, or if I'm not mistaken. Yeah, but it's not like blank they lost this 500 million, this 50% of share. I'm not sure, my dog is digging in his bed, but okay, now it's relaxed. Okay, let's go back. MSMB CTP overlap as well. This is this indicator for cross-selling between software solutions and other services and products, and we can see that we don't had these numbers in the past. Let's see if we had it if we can check it out, if we can find it in the documentation. Overlap. It was 4.9 1 year ago. Okay, that's great that they have it. So we can enter it actually. What is now going on? Oh, that was the wrong. Oh, it's right. After this StoneCo sessions, even if I love it, all those numbers. Oh no, that was not. Oh no. Shit. Okay, we don't have it. I already entered it actually. Okay guys, let's go back. And now let's make a quick judgment, even though I will not color it. It's not a relevant number for me. But you can see this overlap is growing with 18.4% year on year. Not sure what was past quarter the case, because we don't have these numbers, unfortunately. It was not available in the press release. But it's still growing. It's still growing quite strongly, even though we already had the same level in Q4 2023, but keep in mind Q4 is a very strong quarter, so nothing negative about this. I assume it's not that bad, but yeah, again, I think this cross-selling potential, this kind of stuff, might be limited. More important is if we get some money out of it. And when we take a look at software adjusted EBITDA, honestly, it looks good compared to past quarter. But again, that's the reason why we cut out the seasonality. We see Q2 year-on-year growth of or decreasement of roughly -4%. Now roughly 10% negative. That doesn't look good, guys. Why is that the case? I mean, you can see Q3 2023 almost 80 million and now only 72 million adjusted EBITDA Brazilian real. Not that compelling. I rate this negative. Hopefully I'm not too harsh, but feels for me right. And now check out what is going on with the software adjusted EBITDA margin. And that actually doesn't look that bad. I mean, again, compared to 1 year ago, it's just decreasing quite strongly. Maybe Q3 was a very strong one with almost 21% adjusted EBITDA margin, the EBITDA margin. 18.3 doesn't look bad, and but still, I'm not sure, man. I'm not sure. Look, I rate it as well negative. Maybe I'm too harsh, but software business is still difficult, let's say it like this. I think that's the resume of it. Now, but coming to the top numbers, what is really this company providing for us as the shareholders? And we have the adjusted administrative expenses. So let's check it out. I mean, actually, it's not that important number for me, but the cost level, of course, is important as well. And they use it for the full year guidance. So I assume it is important. And I adjusted, this is the adjusted profit. Okay, it should be right. Let's see if it's correct. Yeah, it's correct. Okay. So what we got here is 256 million Brazilian real. 2563. Let's go back. 256,300,000. Man, maybe I used too many KPIs for StoneCo. Or I think many of them are interesting, so I want to keep it like it is. Adjusted net income, way more important for me, of course, and very likely for you as well. We have the adjusted net income right here, and adjusted it's 5868. 5868. 5868. 5868. Okay, and we not need that much more, just the adjusted net cash position. I mean, they're buying back very aggressively shares, so might be the case that from the ongoing program, I think, which is finalized in Q4, or was finalized in Q3, it might be lower actually, but let's see what is the case. So going back, checking out the net cash position, adjusted net cash. Okay, we already have it here, but I want to see it in the balance as well to make sure not using the wrong one. And you can see that it's actually lower, 4923.8, 49238, 49238, 49238, 49238. Okay, and now we can cover as well and discuss those numbers and focusing those both, because these are the ones I want to put a rating label on. Adjusted net income, you can see it. I mean, past quarter, past quarter was crazy with 54 year-on-year growth, 54% year-on-year growth, so a very strong one. I think still with 35% it's strong, even though not that convincing like the past quarter. However, I will rate this as positive. And the income margin here, talking about last quarter, again a stronger year-on-year growth with roughly 5%. Now we're talking about roughly 4%. Still quite impressive. It's definitely a record and way stronger than 1 year ago. Love to see it. And so I rate this as well for sure as green. So it seems like the business itself getting more and more efficient. And at the end, when we talk about cash cow, is it a cash cow or not? It looks like a cash cow. Yes, the cash balance, the cash position is lower than past quarter, but one more time, I think they bought back a lot of shares. We will check this out in a moment. The last chunk, the last buyback process step was very strong, if I remember correctly. And so I guess that's the reason. And if they not start another buyback program, which I can imagine is the case, will be the case, and might accelerate the stock price a bit. Yeah, if that's not the case, then very likely the cash position will grow very strongly and quickly. So now we take a look. We covered all the numbers of the current results, but what we want to focus as well is the full year guidance. Yeah. First of all, we want to check out if the targets are still the same, if they not, hopefully didn't adjust them. And I think the guidance was, honestly I have no clue, but we will see it together. Here it is, the guidance. Okay, so 412, largely on track to deliver our guidance. Okay, we just need to focus these both columns. 412 and okay, that was that's what was originally as well the case, as you can see here. Then we have 7 billion in client deposits. That's the same. I hope you can follow, so we can do it a little bit quicker. Then we have credit portfolio of more than 0.8 billion Brazilian real, and that's still the same, as you can see. Then we have 2.49% take rate. That's the same. We have administrative expenses of less than 1.125 billion Brazilian real. I assume that's as well the same. And adjusted net income more than 1.9 billion, and that looks as well good. So let's see what they have actually. Oh, Zajid 72. Yeah, you are asking the question. I will come back later. Don't worry. Yeah, please stay patient, and I will cover your question. I hope I can answer it. However, guys. So here's how much already is covered, yeah, in terms of the full year guidance. First, I want to point out that they didn't adjust it in up, but not in the negative as well, yeah, and that's great. Negative would be not that nice. However, CTPV is covered. Okay, that is not how it should be. We should CTPV. We need to add this. Is it MSMB? Yes. This plus this plus this. Okay. All right. And everything else should be fine if I'm not mistaking anything. Just administrative expenses. This as well, we need to, of course, add the other numbers. And adjust the net income as well. Okay. Now it should be good. Or credit portfolio, what is going on here? Wait one moment. That's not accurate. 95 credit. Oh, is it 80? Maybe a zero is missing. Oh, what I'm missing? I'm using maybe the wrong number. Just a moment. 0.8 billion. Okay. And the credit. Credit portfolio. Maybe they're using this. Yeah, they're using this number, 923.1. Wait, I show you the screen. 923.1 is the correct number. That makes sense because that is as well stated at their shit. 923.1, and that is what they're stating here as well with this. So going back, entering this manually. Okay, and now let's check out what is going on. And I mean, yes, all of these details, I mean, that doesn't look bad at all. That's already quite neutral to greenish, so quite positive. But when we take a look at target covered, yes, MSMB, CTPV, it's a little bit behind, but keep in mind that Q4 is the strongest quarter by far, so I rate it neutral. Then we have the client deposits, and it's already full year guidance already covered almost, so that's definitely positive. Credit portfolio is larger than expected, positive. Take rate larger than expected, positive. Adjusted administrative expensive, 64%, so way lower than it should be, which is great, positive. And adjusted net income, they will definitely beat it, I expect. So positive, overall positive. Looks great, looks amazing, and that is definitely convincing, let's say it like this. So full year guidance as well, positive. Let's check out what is going on with if there is any information about the midterm guidance. I just want to make sure that, because they at the fourth quarter of past year they shared midterm guidance for 2027. I just want to make sure that they're not telling, oh, we adjusted into the negative direction, but it seems okay here, and I don't give it any rating, yeah. And those numbers are not perfectly in shape because you have seen I need to correct it a bit. But however, full year guidance looks great, and I don't want to lie, man. It's not that bad. Yeah, revenue is lagging a bit behind, but overall TPV looks good. All this banking credit business looks somehow good. Software business, yeah. I mean, I would love that it's working out. I would love that that's the case and somehow developing in a more positive direction. But it's not, and if it keeps this status, I would prefer that StoneCo is honestly selling the links part, yeah, that is all I can say. However, the income level is strong, the full year guidance, they are definitely on track, no matter what kind of headwind is existing. Yeah, and especially one more time, the EPS beat, that is definitely a lighthouse. That is definitely something positive, very, very positive in my perspective. And if I'm not missing anything, hopefully I'm not miss something what is very relevant. But from my perspective, I rate it positive. Yeah, green, red, okay, green. Everything looks good so far. And I think, especially considering the stock price, but that's a different story, honestly, guys. But yeah, it's definitely surprising and positive from my perspective. That's all I can say here. And before I answer the question of Sajic, I'm not sure. Let me know if I pronounce your name correctly or not. But before I answer it, and I don't have that much battery left. I mean, I have a charger not that far away. But yeah, let's go on and maybe quickly go through not the press release, but the presentation, if we see something interesting. I don't want to invest too much time, honestly, guys, but let's see if something is there what we should focus on. I mean, those are all the core numbers we already covered. EPS continuous improvement due to successful strategy execution, share buyback program executed by September. You can see it, 13.2 million shares, so it's done, and hopefully there is a new one. Would love to see it, but let's figure it out. Total revenue covered, adjusted EBT covered, adjusted net income covered. Yes, not everything is perfect in the world of StoneCo. Yeah, completely fine with it, but nobody can tell me that it's currently, at least, not a cash cow. Maybe it's challenging to reach their 2027 targets, but so far they proved in 2024 they execute very, very well. A record level driven by healthy take rates in payments and higher monetization in banking and credit. Yeah, of course. I mean, look, we covered this already, all of this, yeah. Bundling, this retail deposits, active clients. Okay, main highlights, time deposits. 1.7 billion off-platform and on-platform invested in Reserve Stone, and okay, it seems like it's working well. Let's say it like this. Credit, let's check out credit. Okay, here I'm interested in this 3.7 if they say something about it. But first we cover this, reduction of provision, observed guidance, met, yeah, they already met the guidance. That's nice to see. Natural result of the portfolio maturation process indicating we are aligned with our internal expectations in risk appetite. Yeah, and that's as well. Look, risk appetite means, okay, how far do you want to go? I mean, that's the reason why the classic ratios in banking business not count that much. If they want to increase revenue, they just simply do it. If they want to reach more clients, it's way more easy for them than for food chains, for instance, or something like this, because they can just make sure to grant more interest rates to their deposit customers, better credit card conditions. All of this is possible, but what comes in hands is always this risk, and that's the reason why this NPL, this default rate, is that important. And if they tell, okay, we are ready for this risk appetite, it's completely fine. I trust them, and I hope that's the case, and I think it's still, again, way lower than Nubank, for instance. And I love Nubank, as you know. Okay, we got this here. Cost expenses. Credit losses. Okay. Mostly due higher funding needs. Impact work this effect. Partly reduction of leverage. Okay. Okay. Impact of our buybacks. All right. Yeah, obviously, and that is what we will see here as well now, I guess. Share buyback program was almost fully executed with 237 million in 2Q 2024, and you see 742 million Brazilian real in the third quarter, so more than 100 million US dollars. Doesn't sound that much, but for a comparatively small company, it is, and seems like was almost fully executed, so it's somehow not fully executed, I guess, or it is now executed, not sure. I think there's a bit left, and that is the major reason why it's decreasing. Yeah, so that's, I think, fine, absolutely fine. Okay, now we're going on with software. Cross-selling financial service to software clients via bundles with primary focus. Yeah, nothing new. remain on track. Primary product integration. This is with this gas stations, retail stores, drug stores. Software plan complete. We decide to evaluate potential options. With initial phases of software plan complete, we decide to evaluate potential options for this business to maximize shareholder value. Yeah, it might be the case to sell it again, this software business as a total. Yeah, we see it here. Look here. We have engaged advisors to analyze and explore potential alternatives for the software business. I guess which means to sell it. Not sure, but this is what you have read in some media pages. But let's see what will be the outcome. Okay, then we have a bunch of balance sheets, and all of this is fine. Okay, guys, I rated positive. DPS is very strong. Now let's check finally together how the market reacted. I think it's up, but I would not be surprised if it's down, because it is just running under a strong shadow. So let's see, let's check it out. And update investing.com, and it's actually down. If that's correct, yeah, it seems correct by it's plus minus 0. Let's see what tomorrow brings. Look, numbers for me are not that bad, and I have time, and especially when I'm at least satisfied with the numbers, I can stick to the stock, and for me these results are definitely better than past quarter. As I mentioned originally, I thought they are negative. Now then I adjusted them to neutral. I already was thinking about selling the stock, but I decided against it. Let's see if there are already some market reactions on Seeking Alpha. Some investors and analysts commented under the results, and you see there's only a thin coverage by investors. We can see where's the barely any after-hours reaction for such a liquid stock. Yeah, I see it's the same, but this is how it is. And here this guy is telling, if the numbers I have from Google Finance are correct, this is a revenue in line and EPS beat of roughly 15%. Yeah, it seems like it is the case. It is the case. And I mean, when we really check out the KPIs, and I mean, that are just the superficial ones, and we check together right now, screened it way more in detail, but look at this price earnings ratio of less than 11 right now, and let's see what will come in the next year. And is here anywhere sales, price sales revenue, but still, I mean, we can calculate by ourselves. Revenues 12 billion. Okay, that's Brazilian real. That's Brazilian real for sure. So it's, we need to deduct. It's maybe roughly 2 billion US dollars. 2 billion US dollars. Brazilian US dollars, 2 billion US dollars compared to a market cap of 3.5. So definitely a low ratio. Definitely a low ratio. However, Sajic, I told you that I will answer or react to your question, and you stated, I hope you will answer. I'm just curious why you would invest in Stone over SoFi. Don't you think SoFi growth beats and TAM, total addressable market, he means, are all better? Look, a good question. A good question. In the end, I originally was invested in SoFi, actually, before I decided to getting way more concentrated and focused in terms of selecting stocks, and only focus on 6 stocks. And first of all, I love this idea of point of sales terminals. I love this business case simply. Yeah, I like in general the StoneCo, the company. I like the customer data, the insights they have with these terminals connected to the software business. Just the software business itself is for me a business case, even though it's not running at all very well. But I love this ERP business. Yeah, I really appreciate it. It's cash cow business regularly, let's say like this. Not sure what is there going on, but at least in the European market, it's very good business. Yeah, I had my connection points in my professional life with it, let's say it like this. And so I like this very much. Why I decided to sell SoFi? Basically, I decided for a new bank. Yeah, for why? Because I'm first of all more convinced into the region, Latin America, than into a more already saturated market and further developed market like the US. Yeah, I see more potential with new bank in Latin America, and even they can join into the US in the future. Let's see, and maybe can do good business there, but already doing very good business in Mexico and Colombia. So that's the reason. For me, it was not the question if SoFi or StoneCo, it was more the question of new and SoFi, because I only want to invest in one true banking business. And at the time when I invested, SoFi didn't have that strong focus on this digital banking, on the credit and banking business. It was more the software combination with this point of sales terminals, which was attractive for me. And so, I always saw new and SoFi, new and StoneCo as one company, more or less, as one investment. Yeah, somehow new performed very well. StoneCo new performed very well, and StoneCo underperformed in the past months. And at the beginning, it was completely opposite way. I think with StoneCo 80% up and new just 20, 30, 40%, something like this. Not bad at all, but that was the case. And so, yes, that's the background why I've decided to invest in StoneCo. And actually, I love to be invested. Look, it's the same with Alphen. Oh man, I'm running really out of battery. Wait, give me a moment, please. Just a quick one. You see all the bullshit behind me, but it is how it is. Okay. So keeping it simple. Oh, wait, one moment. Hopefully it's not too loud for you if I push it again through my pullover. So there we are. Yeah, and again, I have my doubts with the StoneCo investment, but it's not like I want to stay patient, and I see still a lot of potential, a lot of room for improvement. And actually, if they just can hold their direction and head further, I would not be surprised if the stock price re-accelerates again. It was in the past the case 1 year ago, and for me nothing has changed that much. This thing is a cash cow for me, and it's still. But however, look, if next quarter results are bad, for instance, and they adjust their midterm guidance, or the guidance of 2025 is very bad somehow, something like this, or in the call later on, they talking about very serious issues. With currency, with inflation, with interest rates, whatsoever. I have no clue. Competition is getting stronger. People are not adapting to the software. Then I'm out. It can be the case, look, in the end, for me, it's really entertainment here for you and for me. And maybe it helps you, maybe not. But it's really important that everyone who's the viewer here makes decision based on really their own research, their own facts, and I try to separate and analyze all the numbers as good as I can. Yeah, and in terms of StoneCo, you recognized it very likely. I already get kind of tired by all those numbers, so I'm happy that I now can start to just talk. But look, I invest in companies and not in stocks. That is my first principle. Yeah, and for me, it doesn't matter what the stock market is doing. Yeah, I did good money in the past days because of Hims and Hers, of Grab, of New. All of this is running so well. It's good feeling, good experience. Yeah, but if it would not be the case, it's fine as well. Soon or later, like I mentioned for StoneCo in general, doing revenue is great. On a certain level, you want to monetize it. And as an investor, of course, as well. There's a certain point in time I want to make money with my investments, would be great. But for me, it's a big hobby. And on the other hand, if I see that the reality, the business itself, the fundamentals, the products, the services, the management is developing somehow, or I see some potential at the end of the horizon, yeah, maybe next year or whatsoever, even 2026, that it can work out, it's okay. I stay patient because I don't want to time too much in investment. And it would not be that surprising that market sometimes sleeps on something, and doesn't mean that I'm that heavily convinced by StoneCo. Again, it's ranked 6 and it will stay there. Yeah, and if I only can keep 5 stocks, I will sell StoneCo like this. Would not think twice about it. But it's not like, look, the question is good, but in the end, there's definitely strong reasons why I am not invested in SoFi, but I'm invested in Nu and in StoneCo. I would still always prefer this combination, Nu and StoneCo, over SoFi. And this is how I see it, basically. Yeah, that's it. Let's see what you wrote as well. Don't worry about pronunciation. My name is just supposed to be Zaji72. Oh God. Okay. Yeah. Thank you very much that you are that kind. I get to understand it. Thank you. Yeah. Very welcome. Very welcome. Don't hesitate to ask more questions. I always like to answer it and try my best. I understand as well that others are invested in SoFi, and SoFi is increasing very strongly in the past weeks. So very happy for everyone who's involved. And a lot of times I talked about, should I invest in SoFi? There was even the time when I checked it that maybe it was valuated a bit lower than Nu, but still the circumstances I like it too much. You can ask me the same question with Grab. Valuation for me is not really that well from Grab, really. I mean, just based on the fundamentals, I need to sell it right now, or even 2 weeks ago, or even I should never invested in it actually. But because of Southeast Asia, the reputation, the standing, the product portfolio, it's for me not about valuation. It's if I would work in this company, I simply would think, man, I would love to be invested in it. So this is how convinced I am. And that's the same situation when I would be active as a let's say sales manager for StoneCo point of sales terminals, yeah, or if I would be whatever marketing person at Nu whatsoever. I'm just simply convinced. Yeah. Increase after this report if they can hit 2020. That's crazy cheap. Yeah, long-term investing. That is how I see it as well. I mean, really, last quarter results, I mentioned multiple times that I was a little bit surprised they're not focusing anymore in their press release the 2027 midterm guidance. In their earnings call, I think, if I'm not mistaken, they stated everything is okay, and it's not like they didn't told like it's not valid anymore, this 2027 midterm guidance. And that was for me a big game changer. If that should somehow get adjusted into a negative direction, this midterm guidance, that would have for me a big impact on the investment thesis. Let's see what will be the outcome as well, if they really sell Link's software business or not, and for what kind of conditions. It will not be the best ones. If they have further buyback programs in the future, yeah, StoneCo doesn't seem that exciting for me, honestly. And again, I like more revenue growth than profit growth. But till now, I have good feeling for the business. I think it's way more challenging for me to start to research into a new one, and maybe figuring out then it as well has its risks, and each business has its risks. There's always the question if they get realized or not. And to be invested in one profit growth company like StoneCo, I think it's not that bad. And maybe it's too much financial products and financial services I cover at the moment with Nu, with StoneCo, and with Grab, even though it's just part of the business at StoneCo and Nu. But let's see. And we should not forget at StoneCo, let's see how this credit banking business run out. But from my perspective, that's a full new business in a business, let's say it like this. That's a full new engine basically, and a full new business case. Again, do your own judgment, really. I don't want to get blamed later on and nobody should complain until Julian told me this or that, really. Even for me, it's not that clear, but I still think it's somehow an interesting investment. Yeah. Again, really appreciate it. I also love concentrating rather than buy all kinds of stuff. Hymns, Palantir, Shopee are my positions. Yeah, that's strong, man. That's a strong setup, man. It's like all stuff, favorite stuff in the past quarter. So big congratulations very much for your performance. Long Mover Ma'am, great talk. And Ulysses Hymns is better bet at this point, I think, but I have to think about this. Might reduce if nothing happens in Q4. StoneCo, I mean, that money for too long is a bad thing. Yeah, and I can completely relate to it. As I mentioned, again, it seems a little bit boring, seems a little bit outdated. I think I'm a little bit surprised why the market is not appreciating what is going on with the business, and that's somehow developing, and seems like setting a high focus as well on the software, and it's not working or whatsoever. Not sure what is actually the reason for it. I mean, you can read it by yourself what analysts stating about it or telling about it in a negative perspective. Look, SoFi as well, you know it as well. After each was the case with SoFi, after each earnings it dropped, or after each earnings it increased the price and then it dropped, something like this. I think after each earnings result release at SoFi, the stock price raised and then it dropped in the weeks after, and now it really there was somehow a game changer, and now it's accelerating that heavily, but it's nothing that new as far as I can see it for SoFi at least. It's performing very well in the past quarters already, and I can imagine that comes with StoneCo as well in hand. And look, I don't want to simply be the person who missing this out. If I can look, if there's the risk that I look back, and think, man, Julian, why you didn't stay patient? You had the feeling it's not that bad. You trusted still the management somehow. Yes, they have the issues. The co-founder left the company recently. As well, not bad information. Again, Berkshire Hathaway out, macroeconomics, all of this stuff is existing and definitely not easy and definitely some headwind. But somehow you see the results are not that bad. And as long as the results are in line, for me personally at least, and as long as midterm guidance is active and stable, looks for me quite well. What did you tell Zajic? I actually sold Nu, even though it's a great company and stock, but I prefer investing in USA after Trump win. Also, Nu is very highly valued, going to be more selective about international stocks. Yeah, I can understand it. The same for me. I mean, in Nu, luckily, I am 250% up, even though the position's not that large, because I originally invested just 5,000 or 6,000 US dollars. So it's now something like I need to check it, 19,000 US dollars. Definitely not a low absolute number. It always depends on the personal wallet, let's say it like this, of course. But it seems for me as well fairly high. And however, it already seemed for me high 1 quarter ago, the valuation. And yeah, I'm ready for a setback, a reset in the stock price, and that it maybe drops by 20-30% and then it re-accelerates again. It's part of the business. It's fine for me. I think I'm not that strong in timing stocks and investments, selling as well as purchasing those shares. And so therefore, this is the reason that I try to stay a little bit more patient than I should already be. I mean, it's maybe very dumb. I'm not as well experienced for years and years and years. I mean, as an ETF, I started with investing in ETFs, I think in 2015. I was always very active in it already before investing into ETFs. I was backing the stock market and investments and this kind of stuff. But investing in single stocks, I think I started 3 years ago, something like this. And since 1.5 years ago, 1.5, 2 years ago, I'm highly focused on really high selective stock picking basically, and more or less invested in these 6 stocks. Yeah, I had 2-3 others which didn't worked out well, and Alphen and StoneCo is still struggling, especially Alphen. Maybe I will make my experience, I need to make my experience that I should take some profits on a certain level, or maybe I will make the experience that I should left the building in terms of StoneCo and Alphen. Maybe it's not the case. The future will show it, and that's the reason, again, one more time, it's just entertainment, and therefore very important that you do your own evaluation basically. However, guys, coming back and just a quick outlook, what comes next. We'd already discussed it. Nubank, the largest digital banking institution out of Asia, actually, with more than 100 million clients, will get covered tomorrow evening, I think, at 4 p.m. ET or 10 p.m. CET. And yeah, let's see. Honestly, I don't expect too much. Not positive, not negative. Actually, more feeling that might be surprised more in a negative direction, especially because the valuation is now quite high and investors are already used to strong beats by Nu. But let's see, this company always surprised, and maybe they can make it happen one more time. And yeah, and then at the beginning of December recover as well. Cybersecurity company SentinelOne out of the US. Guys, if you enjoyed what you have seen in the past almost 2 hours, then feel free to like this stream, this episode. That always helps the algorithm. Others help find the streams, find this YouTube channel. That again keeps me motivated, and that's good that I can go on with this kind of stuff, because motivation, I guess, is always very important. But that you are that when you are that active in the comment section, I really love this. Yeah, feel free as well, if you didn't subscribe right now, to subscribe to the YouTube channel. And of course as well, you can follow me on X and on Instagram, A Sense of Capital, the same name as my YouTube channel. And Lawn Mover Man stating, last comment for today, post-market reaction 0.09% for Stone, so a bit of meh. Yeah, I understand it. Again, I can understand everyone who's selling the stock, everyone who's buying it already, everyone who's just holding the position. Absolutely, it's not that easy, not that simple. However, I like the results and I can't ask for too much more, and that's the reason why, very likely, without any promise, maybe tomorrow I wake up and have a different opinion, but very likely I will hold as well my position and just wait what will happen in Q4 actually. Guys, thank you so much for joining, and one more time for being that active in the comment section. High appreciation for this. As always, most important, stay healthy, take care of yourself, most important in life, way more essential than money is health, for sure. And guys, that's it already for today. I hope I see you maybe tomorrow, maybe when we cover SentinelOne in December, or next earnings season again at StoneCo. Like you, Zajish, you do the last comment. You stating, take care, man. I like your diligent analysis. If you like him, I highly suggest you look at LiveMet. Yeah, I know it actually. It's even cheaper, still not get profitable, but once profitable next year. Maybe spike. Yeah, you're right. It already, I think, spiked yesterday. 22-24%, something like this. I have it a little bit on my radar, but honestly, I'm quite busy at the moment with private life, with business, dog as well, in the background, watching the stream, I guess. Even more loyal viewer than you guys, maybe, my dog. However, yeah, I need a little bit more time in the future for setting a higher focus on YouTube, but let's see how this will run out. but now I check. I put the focus on the essentials, which is my live earnings. That's my core value for you and for me. What I like to do at most to cover earnings results live. That's really what I like, and maybe in the future I have more time to do more research about new companies. Maybe do an analysis in the future, like I did with Grab in the past. The feedback was quite overwhelming actually. And I've get a lot of subscribers through this analysis, but yeah, it just takes a lot of time, and that's sometimes the limited capacity. Yeah, thank you to both of you guys, along with Roman Zajic, and of course the rest as well. Yeah, I think as well it's cheap live mat, but again I need to check it out, screen it a little bit more in detail, but still I think Hims and Hers has a lot of room to go. If they do it now, not sure, maybe stock will drop a bit and then go back to another level, let's see. But I'm convinced that at least the stock will in 1 year be on a higher price level than right now. Okay, however guys, take care of yourself. Cheers, see you next time. All the best. A sense of capital.